SNY stock. This is Sanofi Pasteur. They're in France, and this is a vaccine company. And so there's just a news flash today that for TBIO, so Sanofi just made a deal with TBIO to sponsor their mRNA vaccines, and so they gave them 425 million, and that's a combination of cash and stock purchases. And so Sanofi will be producing and developing and selling their vaccines, and then they'll pay royalties to TBIO. And so TBIO is kind of the mRNA lab company that they're working with. And so the big news blast today is on TBIO, but it was a deal between these two companies, and that's not the only thing that they have going on. And I just wanted to take a look at the chart. So the TBIO chart just like blew like up into a hyper little bubble that looks like it'll do maybe a little parabolic reversal. But this is just general good news, I guess, for this company. And so yeah, so nothing super dramatic here. And this is a really interesting chart because they have followed they've followed the general shape of the market pretty well. And so this is just a general kind of biotech sector chart that doesn't look super dramatic, but they do have several COVID-19 vaccines kind of in the works. And so let me talk about the other one. You can take a look at my TBIO video to look at the mRNA vaccine. And so I have a playlist for the COVID-19 companies, and so if you go there, you can see that TBIO stock there. Yeah, so they're looking to move their trials up this year. From December up to September, they're trying to speed up their release dates, and just like a lot of the other vaccine companies, like they're ramping up production of the vaccine before they have any results saying that it's safe or effective. And so they're aiming for 100 million doses by the end of this year, and then 500 million by the end of next year. And then, I mean, I guess if the trials fail, I don't know. I guess they just wasted all the production. It's sort of a risky thing, and the governments are chipping in. And I don't know if this is part of the Operation Warp Speed that Trump talks about or not. This specific one, but they're doing pre-production on vaccines that haven't passed the trials or anything like that, and so they're looking to get the early phase trials this year, and then they would be working on the phase 3 and FDA kind of stuff early next year, with release dates maybe like June. It was saying maybe June, and so these dates are fuzzy. They keep changing a little bit. So this is not a company that's looking to produce one of the earliest vaccines that could be released, but they have a couple of different things coming out, which is pretty interesting. So, I mean, if any of these work, it would be good for the company. And GlaxoSmithKline that they're working with, GSK, has that's called an adjuvant that makes it makes your immune response to the vaccine bigger so that you can give a smaller dose and get the same kind of response. And I forget, they had a quote of why they're the best on. They're the only vaccine in the race that works off a proven platform, a proven platform that works on scale. Um, so they're talking about their production, and distribution of the vaccines. And they have a proven system, and so yeah, maybe. That doesn't mean that this vaccine is going to work or the other one. And so we'll see. There's a bunch of vaccines kind of being developed faster than they can be tested. And so if we do get a vaccine that looks good and gets approved, it could hit the market. It could hit the market really fast. But it is a little bit of added risk to all these companies, ramping up and paying for production of a vaccine that, I mean, you don't usually do that, obviously, but this is a special case. So let's look at Sanofi, and this will go on that, the coronavirus list of companies to take a look at. But, this is a much bigger company. They have flu vaccines, and And so the coronavirus vaccine isn't like their only thing, like kind of the mRNA company or something like that. That's just going to have a crazy hypey stock based on that one thing. This is a more stable kind of healthcare industry company that it's in a good sector that's been doing well over this kind of craziness. And let's take a look at. Oh, I think let's take a look at gold because I think gold was trying to make a move. Okay, so it hasn't quite broken out yet. I've been hearing a lot of people saying that gold might break out, and you can see the moving average has kind of been swinging up underneath it, and the momentum has just really stalled out. Well, let's look at it. Yeah, pretty boring stuff. And I mean that's kind of obvious from the chart, but it's trying to make a little move right now, and really for a breakout, it needs to do well more than just that. It really needs to get up out of this area that it has been in forever. It needs to kind of get up out of here and check this thing and test it from the top. And then when it starts going up, that could be a move. And this is the Sprott physical, so these gold prices are not the spot price of gold, but just the general chart, general shape of the chart. Gold's getting towards the top edge of the range, so we'll see if it breaks out and kind of does a bullish test on the top edge of the range, or if it comes back in here. We'll have to see this week. We're gonna get some interesting numbers. Like the GDP numbers are coming out. We'll get some more employment numbers. What was the crazy news today? The trade deal. They announced they announced the trade deal with China was off, and then changed it. And they changed their mind like half an hour later. And so the trade deal, the phase 2 trade deal with China is still on. And if you've been following the trade deal with China, like the big thing is they're trying to get China to buy like $40 billion of soybeans, and they haven't committed to doing this at all. Like they're just like, okay, whatever you say. And then I think it's less than like for this month, they're supposed to get up to like $40 billion of soybeans. That's cumulative total over the last several months, but they're not even at 4 billion, like 1/10 of that number they're supposed to buy. And soybean, and it's just nonsense. The trade deal is kind of nonsense, um, but it's not nonsense in the sense that China has been diversifying their trading. Uh, you know, they've had a strong economic blast. They have huge manufacturing. They've been trading with a lot of other people, where they had a really specific trade deal. Not even a deal necessarily, but they just had a big trade relationship with the U.S. for a very long period of time, and now they're starting to kind of spread out and trade with everyone else. And so America's putting the clamps on. Like America has not issued them a swap line, and so they have a bunch of dollar debt and no swap line, and so that's kind of pressure on them. And America has been threatening sanctions against China now. So China wasn't on that list of people that they were trying to put sanctions on. Um, but sanctions basically means that people trade. They have to trade in dollars, and they have to use the SWIFT dollar trading system. And then when you put sanctions on, it blocks them from using. They can't trade. Like it makes it really difficult for countries to trade with each other when they get locked out of the dollar system, basically, because you have to use dollars to trade, and then America can just cut you off from being able to use the system. And so that's the big tool that America has been using in the international kind of sphere. And so yeah, China's a really interesting one to watch. They've been working on their own kind of currencies and talking about trading outside the dollar. The Bank of China has been mentioning like defaulting on some dollar debt. Like they've been saying some crazy things back and forth, and America's talking about sanctions, and there's a whole mess of like warships in the South China Sea right now. So there's definitely some stuff going on. But this trade deal, the huge news well, maybe it's a trade deal, maybe it's not a trade deal, is the least of any of that stuff. Like, that trade deal was never even a real thing. Like, they're supposed to buy some freaking soybeans. They're not buying them. Um, but but yeah, America's had tariffs on the Chinese to limit the trade, and so it's definitely a situation with China. It's definitely way more. It's way more tense on the. And it's not just trading. It's not just like trading some soybeans around. Like, the tensions with China have to do with the monetary system. They have to do with trading with other countries. And so if countries start trading outside of the dollar, which is what they're working on, is it's a huge threat to the U.S. dollar as the world reserve currency. And so that's really what's going on with China. And so this stupid trade deal stuff is kind of nonsense, but there is real stuff going on. And yeah, so gold is silver moving? Gold and silver, would respond well to sort of inflationary indicators, but we're not really getting that. Like, we're not really getting inflationary indicators, and the fundamental situation where gold should do well. I mean, they're not printing a bunch of money right now, but the Treasury General account is really high. It's like over $1.5 trillion, which is crazy. Like, the Treasury General account, the amount of money that Congress has to spend, like, directly into the economy that could be inflationary money, is huge. It's I think it's like 1.6 trillion or something right now, and they could spend that out in a week or two if they want to. And I don't think they could do it quite as sneakily as the Fed, because they have to pass bills that explain where they're spending it. But they have several bills floating around now, and so they could probably just pass and spend that in a hurry if they want to. They have some infrastructure bills, and they have some stimulus kind of bills, and so those bills could they could just come out to that number they have ready right now. They don't have to do anything other than just sign the bills, and just like they can just spend it in a hurry. And that, if they start spending that, like, that's the signal that I'm really looking for, in terms of like when gold or silver could really break out, is if they start a serious inflationary policy. Because right now all the Fed money printing has gone onto bank balance sheets, and people are saying that it's driving up the stock market and stuff like that. But really, it's only the infotech sector that is still doing buybacks. And so I think it has flowed into international financials more than U.S. financials this time. And so I've been looking at the kind of the international financials relative to the U.S. market. But yeah, but I don't really see like, it's not like the U.S. market is going up and other markets are going like way down, like they're inverse or something like that. Like, they're all following the same pattern. That's not making sense to me yet. And we don't have inflation indicators. All of the interest rates are low, and they're actually, what are they doing now? They've been flattening out a little bit recently. Let's look at the treasury spreads. So these are the U.S. bonds are yeah, it's still like a little bit of an uptrend. So I mean, if these steepen, that could be an inflationary indicator, but they're not very steep. I mean, they just started to steepen, and now they're not steepening. They're kind of flattening out. So all of the inflation indicators that would be good for gold, I'm not seeing, and I'm seeing less liquidity. And so if we get another move down on liquidity, usually that'll drag the gold down and definitely drag silver down. Um, so yeah, I guess on gold, I'm checking the chart. Like, it looks like it could get into a technical kind of setup where a breakout would make sense on the technical chart, but the fundamentals, the inflationary fundamentals that would cause a breakout, are not really happening. So here's a quick look at the S&P action today. So I pointed out a couple days ago that we might get a wedge reversal. And so it looks like we did get a little wedge reversal, not the big one. This is just break down to the edge of the wedge, which it did. It got a little past it, which is just kind of a small technical setup. But I was looking to see if we were going to get like a big like double tap kind of reversal off of this that would indicate a real big move down. But we just got kind of the small reversal that didn't follow through. And so now we're just kind of in this range. It's like an expanding kind of wedge range here. And so we'll see. Yeah, I mean, it's showing like a little bullish momentum. It just kind of went up a bit, so it looks a little bullish now. But we're kind of just at the top edge of this range. And so this is pre-market activity. Let's see what we get with the real market activity. I mean, it would be pretty easy to swing back and forth across this range some more before we get much of a move, because we're just kind of stuck in this area for now. But really the bigger targets. Let me paint I guess the bullish and the bearish kind of targets. So for a bear market, these are bull market support lines that supported the whole everything bubble. Like this is a 2-year long line that goes back to the bottom of the 2018 bottom. This one down here is a 12-year long line that goes back to the bottom of the 2008 financial crisis. And so as far as a bear market goes, you just kind of reject off the bottom of these lines and stay down. And so right now we're just kind of in the middle of nowhere. And so in a bear market scenario, I think this is a really good target here. Let's see, as a reversal point. Now that we did not get follow through on this here, I think the odds that we're moving up is probably higher than down now. Whereas when we were in this area rejecting off of this, I was thinking the downward odds are bigger. Now that we've just kind of swung out, I think the odds of moving up are higher than down, maybe 60-40 to the upside here. And we'll see what kind of action we get in this consolidation range now. But we have kind of from the bubble structure and the technicals, we're on the backside of this support line, which supported this whole run up on the S&P. This green line is sort of the bull line that we got off the little crash that we had a couple of months ago. And so we've broken down underneath that. And so that's a bearish setup when you get on the backside of that trend line. And we're just kind of in the middle of nowhere. Not really on the backside of the trend line right now. But I think this area here where you're on the backside of this trend line and also back testing the yellow line would be an ideal kind of spot for a big reversal move. And usually you'll get 2 taps and then a major wave down from here. Like this is, a 2-year bull market line that you'd be rejecting off of and coming down off of this whole bull wave line here. And so I think this is a huge bear target to the upside as a rejection point. And then we've already rejected off this line and this one, so we don't have to get back up there. But if we do, that's a really, really crucial spot to look for a bear market reversal or to get up. I mean, if you can get up above all these lines and use them as support, then that's super bullish. So this is a super hot spot right here. And just from right here, I guess a bullish thing to look out for, and this is similar to what I was saying here, is if you can get up above this line and kind of consolidate and get up above here, that's what you're trying to look for on the bullish outlook. Is there's some serious lines here and you need to get above them and use them as support. But if you stay underneath these and then start getting rejected, that could reverse pretty hard down. So that's kind of the bull and the bear idea from up here. But in a bearish case, we have already rejected off of both of these, so we don't have to hit them again. But I think it's more likely that if we were gonna go straight down from here, we would have already. I think we would have broken down under here. And so in the bearish case, you're trying to get down, you're trying to break through, like this is the moving average. You want to break through it and then test it probably, and then break through this and test it. That's the kind of action that you're looking for on the bear side, is to get down, to get down underneath these and test them, and then you can continue kind of a down move. And so we had a really long bullish wave here, and we're not really getting. Let's flip through some indicators on the S&P and see what this momentum looks like. It's pretty boring. So long term, like on the yearish, this is weekly candles, so this is like maybe a 2-year outlook. We're still in bear territory on the S&P, but we're getting pulled pretty close to bullish territory, and so this is really neutral as to where we are, like still bearish. And so if this does reverse down and you stay on the bear side of the chart, then that would be very bearish long term. But then obviously you get up here on the bull side of the chart, it gets bullish. And we're just kind of in the middle area. We can't really tell what's going on. And here on the very long term RSI, overbought, oversold kind of outlook, we're on the top half of the chart. And so, I mean, that's no big deal. I mean, you can keep going up here. There's a long way to go up. But when you go from the top half to the bottom half on this chart is where you see the red candles get painted on the real chart. And so, yeah, it's if this starts making a move down, like that could be a real move down on the chart, especially if it dives pretty deep. And so let's just kind of look at the momentum on the longer term look. But let's zoom in a little bit and see where we are. And so yeah, sort of the couple of month outlook here with the daily candles is that we're making a tiny bearish move up in bull territory, and it's pretty neutralized now. So this is just kind of sitting in bull territory. So it looks like just general bullish momentum out, on sort of a month or two look. We're not making any kind of move to reverse the bearish momentum or the bull momentum right now. Sorry. So it still looks like we're just in kind of a bullish phase here. It's not indicating any kind of reversal on the momentum for sure. And then as we zoom down into the next couple of kind of week outlook, it's a little bullish as of this morning. Here, slightly bullish, kind of, yeah, slightly bullish. And so, yeah, it's just kind of, yeah, a little bit bullish, but maybe neutralizing or trying to move down now, a little bit bullish. So all the momentum is a slightly bullish now, but it's not like, it's not making any kind of a bullish move. It's kind of neutralized and looking to see if it's going to make a bearish move. So not much going on. It looks like we're going to stay boring, is what it looks like. But we do have really high volatility. So let's check out the VIX. Oh wow, the VIX is crazy. Oh, it went way down on that move, and that's an oversized move down and up on the VIX for that little bit of action that we got there. And so yeah, we have this gap on the VIX, and it looks like it's made it down here and kind of popped off of it. So it's not. I was looking at this when we got this move. It looks like a really bullish kind of setup for higher volatility, and now, yeah, I mean it's just kind of wandering down. But we have this big gap here that we're above, and then we have a much bigger gap down here where where the whole crash started like a couple of months ago. And so we're kind of like 2 jumps into a higher volatility regime right now, which is just means that you can get really big swings on the chart, and it's generally bearish, meaning that the big moves are most likely to be downward big moves. Whereas like the up moves usually kind of grind and slowly bring the VIX down, like we were getting here, up movement usually just brings the VIX down slowly. But Yeah, but we're just kind of we're up on a higher area right here, and we came down, I guess, and tested it and didn't break it here. So yeah, yeah, I think we're just gonna keep. I think the VIX is just gonna keep swinging around kind of this area here for now. It doesn't look like it doesn't look like much is really going on right now. Which is well, I mean, big moves are very possible with the super high VIX, but but just all the momentum and everything right now is just kind of eh. So I'm not really expecting to break out of here today. I think, and not that this is super boring either, because I mean, this sideways consolidation, like these swings on just a sideways kind of move, like usually you get tiny little swings like this when you're moving sideways, not this stuff. I mean, this is crazy, a crazy kind of sideways activity, and it's expanding also. So I do think the VIX is actually set up to go higher, just because we have, we have kind of an expanding zone here. Hmm. Yeah, there's just not really very many indicators. So I mean, usually after you do like a big consolidation zone, the market will figure out which direction it wants to go, and it can break out pretty big. Um, but as of right now, it doesn't look like it's doing that. So yeah, we'll see what kind of action we get in the live market and see if we get any kind of breakout signals. But right now, it just looks like it's just high volatility, but it's just still in this kind of sideways zone for right now. And so I guess, yeah, my best guess for today is we're just gonna swing around back in this zone. And despite this slight bullish momentum, it looks like we're just in here. It looks like we're in here and not doing anything crazy. But this week should be interesting when we get I think we're going to get some housing numbers. We'll get GDP. We'll get some more unemployment numbers, and those numbers should all be relatively ugly, but maybe better than expected. Like the rest of the numbers that we have gotten have been pretty terrible, but better than expected, and the market's going up on that news. Um, so yeah, I guess for now we still kind of have what everybody's calling a disconnect between the fundamentals and the the chart. Like the valuations are crazy, but they're not coming down. And what I've been looking at more than the fundamentals for sure is trying to track the actual liquidity, and that's what I think is suspect right now is the liquidity, because the Fed balance sheet is balanced out as like flattened out and started even going down, and so they're not doing QE as of 2 weeks ago. They're not doing QE anymore. They're not buying anything, even though they're saying they're buying bonds. They're just saying they can buy bonds. They're not buying them right now. They're not buying anything right now. And they're actually taking money back out of the repo markets, which should be a good signal. Like that should mean that the banks are able to function and they don't need the Fed to pump a mess of money in there just in order for the banks to function, which is the whole repo mess. Um, that's a good signal for the economy, but that's not good for liquidity as far as the stock market going up on liquidity. So we could see the real economy and the banking sector actually functioning better, but um, but less liquidity for the stock market, and that could go down if the economy is improving. Just looking at the liquidity, which I think is a much better indicator of where the stock market's moving in the short to medium term than trying to look at price to value kind of stuff like that. Because I mean those numbers can be out of whack super long term, especially with the kind of system we have now, where I mean, the companies are zombie companies. They're not making profits like that. Profits are not what are making the companies function. It's just low interest loans, and they just operate off of loans, and they don't even need profits right now. Um, so I guess until companies that are unprofitable start going bankrupt and really actually start getting in trouble, and they can't get loans and they can't keep going. Like once that starts happening, like then the fundamentals will start mattering. But as for right now, we're just kind of in this weird phase, and so yeah, I think there's a high probability that we do have some crazy action coming up soon, but probably not today. It looks like we just kind of hit the top edge and we're just kind of stuck in here still. But maybe by the end of this week we'll get something real, something exciting to trade off of. But right now this is just kind of boring. And yeah, all right. So there's several news flashes that are actually going on right now. So let me maybe I'll do like a kangaroo video next. Everybody's been talking about a kangaroo market. I think that's funny. Yeah, so this is not investment advice, and check out my playlist. This is one of the COVID ones. Yeah, check out the COVID playlist for all those stocks on the COVID playlist, and you can see kind of what those are and where they're going. And yeah, happy trading.